Real estate taxes in the Philippines. Local taxation. These are taxes imposed by local government units. There are 5 key principles of realty taxation: fair market value. Appraisal must be based on current and fair market value. Uniformity. Standards must be uniform within a political subdivision. Actual use. Assessment is based on the property's actual use. No privatization. Appraisal is not left to private parties. And uniform standard assessment uses a uniform standard of value within the LGU. To calculate the real property tax, or RPT, use this formula. RPT equals market value times assessment level times tax rate. First, find the assessed value. Assessed value equals market value times assessment level. The basic RPT rate is up to 1% for provinces or up to 2% for cities and Metro Manila. There is also a special education fund tax, fixed at 1% of the assessed value. Assessment levels vary by property type. For example, residential land is assessed at 20%, while commercial land is at 50%. Structures and machineries have their own assessment levels. Other local taxes include the idle land tax, up to 5% of assessed value. The transfer tax is 0.5% for provinces and 0.75% for cities, payable within 60 days. Registration fees are based on a fixed formula. Payment deadlines are March 31st for annual or quarterly. A discount of up to 20% is available for prompt payment. Penalties include a 25% surcharge plus 2% monthly interest for a maximum of 36 months. National taxation, collected by the Bureau of Internal Revenue. A key distinction is between capital and ordinary assets. Ordinary assets include stock and trade for developers, properties used in business, and assets of financial institutions. Capital assets are any property not classified as ordinary, like a family home. Key taxes on real estate sales include capital gains. Tax at 6% for capital assets, due in 30 days. Creditable withholding tax from 1.5 to 6% for ordinary assets. And documentary stamp tax at 1.5%, due on the 5th of the following month. Value-added tax, or VAT, is 12% for sales by VAT registered persons, like developers. However, sale of capital assets is not subject to VAT. Exemptions exist for residential lots sold below 1.9 million pesos and house and lots below 3.2 million pesos. Residential lease is exempt if monthly rent is below 12,800 pesos. For gratuitous transfers, estate tax applies to inheritance based on BIR fair market value at time of death, with a rate up to 20% due within 6 months. Donor's tax applies to donations, with rates from 2 to 15% for relatives and 30% for strangers, due within 30 days.